Welcome, all of you. Hello, everyone. A warm welcome to all of you, friends. Whether you are new to this or familiar with something called stock market or trading. So, I'm thrilled to kick off this exciting YouTube live session. And the topic you already know stock market trading, a sure, short way to passive and continuous income. So, and the session is with the incredible stock market expert Vani Priya. Today is all about exploring the world of stock market trading and how can it be a reliable path to earning money even if you are not actively working, even if you do not have any knowledge. So friends, in today's world where making smart money is super important. And having someone like Vani Priya in the session to guide us is a real privilege. She's not just a pro at this, but she's also really good at explaining things. And with her help, we will be going to learn how to make the stock market work for us. So we can have money coming in without always having to hustle. So during this session, we will discover tricks and tips that can help us make smart decisions in the stock market. And let me tell you, my friends, Vani has a lot of experience, so she will be going to share things that actually work and that we can understand easily. सो दोस्तों मैं तो बहुत एक्साइटेड हूँ नो मैटर आप चाहे नए हो इस लाइन में वेदर यू आर न्यू इन टू दिस फील्ड और यू आर एन एक्सपर्ट यू एक्चुअली नीड अ गाइड सो बिफोर sharing the stage or before calling the Vani Priya on the stage, I'll share some details about her. So, Vani Priya is a stock market coach and she is passionate on educating and empowering women and teens on financial literacy and financial freedom. Her mission is to create every individual in India to participate in stock market investment and make Indian economy to the next level. So without any delay, let's jump in and learn together and set ourselves up for a future where money works for us. So, and friends, Vani will be there with you for about 30 to 35 minutes. She will be talking to you, she will be sharing her knowledge. And once she will be done, then we can have some question and answers. You can clear your doubts on the spot. And let's make this session most interactive, most incredible session. And if you are super excited about this session, just type welcome Vani and Vani, over to you.
Thank you so much, Prashant. And welcome everyone. And it's an amazing introduction, Prashant. And thank you so much for the opportunity that you have provided me here on your YouTube channel and for your audience. And I'm so glad. And everybody who are here on this session, I truly welcome you, everyone. And thank you, one and all, who has come here because being Saturday evening, it's a fun day. Weekend is actually a fun day for everybody, right? And in spite of that, if you have turned up for this live session, then it's truly honored. And it since you're here, it means that you are requiring some knowledge and you are looking for your next level of your financial independence. So glad to all and welcome everyone. And now let me share my screen. Yeah. So just let me know whether you can able to view my screen.
Just click on present again and share the PPT.
Yes. So I think you can able to view my screen now.
Yes, we can.
Okay. So one and all, welcome. And now let me introduce myself. And my name is Vani Priya, and I am a stock market coach. Now, I have started my career with a corporate journey, then become this corporate journey has changed into a stock market coach. First, I have started with 2015, started learning with what stock market is, and now getting into the coach. And my mission is every individual in India, they have to participate. Either you participate as an investor or a trader or a SIP investment, anyways, in any which ways you want to invest, but your participation on the stock market needs India to go for a next level. Okay, so let's get started. And before we move into our exact topic, I just want to share what is the explosive growth that our India has got especially after this lockdown. So the number of new demat accounts, which is a trading account between April and January in the financial year 2021, it has crossed more than 10 crores of individual account opening. So you can see the chart here. So the after lockdown, most of the people who has lost their job, even one of my friend who is running a parlor business. Okay, she is a beautician in profession, and she's running a parlor business, and her husband, who's earning in lakhs, you don't believe, he has lost his 3 lakhs per month job during the COVID lockdown. And they've imagine 3 lakhs per month job if a person is losing and with no income for the next few months, what will happen to the economic condition? So many of the people started realizing that they really need a passive income at that point of time. So that is why I just want to share these results, these analytics to you before we jump into the main topic. Okay. And now we know that there is a drastic hike in the demat account openings in India, especially after this COVID. And now, can you see the population, the total population, whoever is participating in the stock market, in our stocks portfolios, which is only 3%. Can you see India only 3%? Only 3% of the total overall population is participating, is 3%. And imagine these USA, they are participating 55%, and UK is 33%, and China is 27%, and India is just one digit, single digit, 3%. Yeah. So we have to uh, we have to go through this, and this 3% should definitely go up in the upcoming years. And now, the financial goals of women. Why I'm talking about women now is because I'm also a woman, so I'm targeting a woman. So the women's participation is very less when it comes to investment, and also when it comes to stock market. So their retirement plan, so most of the financial goals for women, 26 percentage of the people who are aiming for this retirement, and 21% they want to have a own house. The 14% of the women who are choosing their financial goal as to educate their child. In the women investors, if you could see, it's on only on top 6 metros, 38.45%. Okay. And these women's, some of these women's, is 30% of the women's are taking themselves, they are taking decisions on their own for their financial investment and decision making. And hats off to the husbands and parents who are here, males. So these husbands and some of the parents who are encouraging women, their daughters and their wives, to take up a step, to take up a bold decision when coming into financial investments and plannings. So they are allowing their daughters and wives to do that. So good to see that male is pushing their wives and daughters. And now the main topic, why you should understand what the stock market is. So now today we are going to see the top 3 things. Number 1 is why you should understand the stock market. Number 2, how you can pick the stocks easily for your portfolio. And number 3 is how you can take calculative risk on your stocks. Okay. So when it comes to understanding the stock market, the number 1 we are facing is myth. What is myth? An false belief system. That is called myth. And what are the power of investing? So you can now understand what is the power of investing into stock markets and what are the opportunities that you will get as a passive income. Now, myth number 1, some people say stock market is gambling, right? So some people say, and you may be one of them, right? So if you say it is gambling, how come the institutions and banks, these people are making profit out of these stock markets? So we have to get out of this myth. And myth number 2 is you need to be an expert. That is myth number 2. This needs to be out, come out of your mind. And myth number 3 is stock market is a get rich quick scheme. So some people believe, right? How when I put this amount of money, I'll get this amount of money the next morning. No, that's not the right mentality. So these 3 myths you need to get out of your mind before you enter into the stock market. Okay. So the power of investing. So what is power of investing? You can go with SIP analysis. What is SIP? Systematic investment plan. So you can take few stocks and you can put your small amount. See, for an example, if you have 1 lakh of amount as a principal, so you can split your investment into 10 different portfolio, 10 different stocks, which is called systematic investment plan. You can segregate, you can just diversify each and every 5,000 in one stock, 2,000 in one stock, 10,000 in one stock. So according to your whichever stocks you feel comfortable and convenient, you can go ahead with that. And what is compound interesting? See, the simple interest is something like if you put 10,000 and the next year with 10% of the interest, it will become 11,000, right? And on the next second year, this 10,000 again will become 10% plus 10%, 20% of interest, that will become 12,000. But when it comes to compound interest, what happens is your 10,000 will become 11,000 on your first year. And on your second year, what happens? Your 11,000 will become 12,100. So it gets these, even the interest gets compounding. Interest will give the again small interest. That is called a compounding interest. So imagine now, how many of you know Warren Buffett and Rakesh Jhunjhunwala? Many of you, right? Yes. So Warren Buffett, he is a legend and he started investing in the year of 11. Imagine we are in 20s, 30s and we are still thinking, can we go ahead and invest? And is this investment worth? Is the stock market gambling? Is the stock market quick rich scheme? So we are thinking 100, not even 100,000 questions for the small investment, right? But imagine he has started his investment in the year of 11 and still he's continuing. He must be more than 80 years. I don't exactly know what his year is or what age he is into now. Okay, and in one of an interview, Warren Buffett said, I regret that I have started investing very lately. So he's regretting that he has started investing by the year of 11. So imagine, we have to learn something out of Warren Buffett, right? Yeah. And Rakesh Junjunwala, he is known as father of stock market in India, whereas Warren Buffett is known as father of stock market for the world. In he is known as father of stock market in India. And even Rakesh ji, he has started in his early age and he is doing a good job. And these two people are profitably making their portfolios with small investment as a compounding and doing a great job. And it doesn't mean that you everyone has to be a millionaire to start this investment journey. No. So we can earn a passive income, an additional support system as a stock market. You can consider stock market as a passive income for your additional support. Okay. Yeah. So this is just a reference for you. If your monthly investment is 5,000 and you're expecting your return in SIP as a 17.2 percentage, this is a rough calculation. Okay. And for a time period of 10 years, the invested amount you have done is 6 lakhs and your estimated return is 9.9 lakhs and 98,000. So the total amount, if you invest monthly 5,000, only 5,000 for the 10 years, you would have got 15 lakhs and 98,000 on your hand. So this is the power of compounding. So now let's take a chart. If you are investing in the year 2003, so this here is a 2003. If you have been invested before 10 years, now this is we are in 2023, so 2013 or 2003, before 10 or 20 years, if you have invested only for 955, now look at the profit you would have received. The market is in 19,265. A vast profits you would have get if you have invested before 10 or 20 years. And now coming to shares in a company. Now, what is shares? You might have a question on your mind like, what is all about shares? How can I go buy the stocks, sell the stocks? Okay, so what is shares? If there is a company, a ABC company, imagine your big pizza is a company. When you buy one share on that ABC company, that is a small piece of pizza. Okay, imagine this, you're buying one small piece of pizza from that from that big company, ABC company. So what happens eventually when the company grows bigger and bigger, your one share will also grows bigger and bigger. So that is how you make profit out of these shares. And eventually making profits in loss, that is a part of these stock market. So to make profit you have to analyze certain things before you invest into any stocks, any companies for that matter. And now number two, how we can pick stocks very easily for your portfolio. Now, number one, you have to little thorough, or you need to understand the technical analysis before you pick up the stocks. And also fundamental analysis is another way important to pick up the stocks. And number three, you can easily select your stocks which is close to your heart, that I'll tell you on the upcoming. So in fundamental analysis, the things we you have to look in is the financial health of that particular company and the management quality. So who is the person managing that company? If this is Reliance, these management groups are getting projects, getting investments from the abroad countries, and they are, you know, they are maintaining their standards and the trend of the industry. So these are the major three factors you have to look into this when it comes to fundamental analysis. If some person feel that how can I go with fundamental analysis? I am not a chartered accountant, I am not a commerce background, I am not a I have not done any business studies. If you say that, SEBI has a group of people who are analyzing these nifty 50 stocks, these the whatever stocks which is coming entering into the stock market, all these stocks are fundamentally getting analyzed by SEBI, and they are entering into nifty 50 or FNO 500 companies. So there are thousands of companies in the stock market, and you need not go ahead with all these fundamental analysis. You need not, you know, pressure yourself how to look into these here, this company's financial health, that company's financial health. You need not go through that. All the companies, 50 companies which is under nifty 50, is very well fundamentally analyzed stocks. So you can pick any 5 to 10 stocks for your portfolio to run and give a massive profits to you. So any 5 to 10 stocks, not more than that. Okay, you can pick, there are 50 stocks in the nifty 50, and you can go ahead with any 5 to 10. That's it. And imagine the fundamental analysis is like, if you want to buy a car, do you only look into the color and design of the car? No, right? Definitely what you will look in, you will look in for the engine, right? So that is where these fundamental analysis happens. So it's like you're testing the engine condition and stuffs, the interiors, right? The stuff softwares. In these nifty 50 stocks works very well, and you can just go ahead without any fundamental analysis, with a small analysis of like technical things. You can go ahead with these stocks. And coming back to technical analysis, what is technical analysis? These charts will give you a analysis. With these charts you can go ahead whether the company is going in a buying state, it's in the uptrend, or is it in the low trend, downtrend. You can analyze with the help of these chart patterns. And there are two important indicators which is very effective on technical analysis. The number one is moving average, and number two is RSI. RSI is called relative strength index. So this chart is 1 day chart of Nestle India. So the blue color line which is here is a moving average. And if you see, when this blue color line, which is a moving average, which is moving upward direction, then you will very well know that the market is moving in a upward direction, and you can go ahead and take a buying position with your strategy. Okay, and when the market is going down, you can very well see this blue color line, which is a moving average 21, it's going downward direction. So when the moving average goes towards down direction, then you can very well assume that the market is going in a downward direction. And the third point is, if the moving average is not moving up, not moving down, it is like wavering. It's like wavering, it's like a wave here and there, then the market is sideways market. So understand, analyze, and take your decision according to that. And now comes to relative strength index, RSI. Now see, what is this RSI? So this RSI, if the market is moving above this 70%, so the RSI normally, if the stock moves above 70%, the RSI indicates, please be careful, there is a possibility for the market to fall. So when this RSI moves above this zone, above 70, you need to be, cautious. You need to put a brake on your car, and you have to wait until whether the market is reversing back or it is again moving towards the upward direction. And if the market goes below this 30 percentage, 30 number, then the market is saying that this stock is oversold condition. Whenever there is a stock or commodity has been oversold, there is a possibility to get back. So when this market has been oversold, it will reverse back. There's a possibility of reverse back. Okay, so with the help of this RSI, you can identify, and according to your certain strategies and with candlestick patterns, you can take up a call whether to go buy or sell, or there is a reversal point. Okay, now with a combination of RSI and moving average, so now we have seen only with moving average, and we have seen only with relative strength index. So with the combination of these two, moving average and with RSI, you can take up a right and quick decision. Now look at this, the market has given a oversold condition here, and now in the chart pattern the market has moved a reversal. This pattern has formed. This pattern is called an engulfing candlestick pattern, and the market has now boomed up. Here you can see the spike in the RSI. Now if you had taken a position here with the stop loss of under this red candle, and your target would be around 22,000, right? So this is how you have to make your decision whether to go buy or sell call. And now look at this, the market has been in a overbought condition. Here after 70, this is the zone. And now here can you see the candlestick patterns is also like there is a wavering. The market is like sideways for long time. And then the market has given a pullback, touches this moving average, and again goes trending, right? So whoever is taking up a position here as a buy, so these people will cover up the position here because of overbought condition. So they will close the position, they will book their profits here and come out of the market. So this is how you calculate your moving average and RSI, and with the candle patterns and with other certain elements, with other certain strategies, whichever you are following, then you can take up a decision along with this. Okay, now coming back to how I can pick my stocks. Okay, so how easily we can pick stocks. Okay, now you may ask me, Vani, I know what to do, what not to do, how to select the stocks, how to pick up how to look into technicals, and how to see fundamental analysis. Everything I know now. Now little confused about picking up the stocks. How can I pick up the stocks? Yes. Now, everybody wake up, right? You wake up in the morning, you brush your teeth. Now, which paste you are using? So, which brand you are using? Now, go see to that stock if that company is registered on the stock market. Okay, then go with that company as your stock, number one stock. Okay, number two, you may be buying cookies for your children, or you may be having some cookies along with your tea, right? So uh, just imagine like which brand you are using, whether it is Marigold, Britannia, whatever biscuit it is, cookies it is. If that company, that brand, the everyday which you are consuming, that brand is available, that is registered in the stock market, that company is listed in the market, go ahead with that. Okay. In number three, you are you're doing driving every day to your office, and you're putting petrol and diesel. And so which petrol bank that is? So if that is registered in the stock market, find out that company, then that is your another stock selection. And you may be receiving your salary on your bank account. So every month you're getting a salary on that particular bank account. So whatever bank it is, see to that it's registered, it's listed, go for that. Easy, right? And we all are using, we can be without anything, without food, but without mobile we can't be, right? So which service provider is that? Yeah, who's your service provider? Check on that. Which company is that? Go buy that stock, invest in that stock. Yes. Any insurance policy you may be having, which company is that? So this is how very easily you can pick your stocks, because every day you're using that, every day you're consuming that, every month you're paying bills for that, right? You trust that product, you trust that bank, you trust that life insurance company, correct? So when you're trusting that particular company, when you're consuming those products, when you're paying your bills every month, so is there any possibility where these products will go down, right? So you have a trust in those companies, those products, then go ahead with that. This is how you can simply very easily pick up your stocks, and also do some certain fundamental analysis and technical analysis before you jump into the stock selection. Okay. And one more thing I just want to mention you here is there was a survey happened in United States between two sides. One side there are small kids, the other sides there are financial planners. Okay, on these two sides it has been asked to pick certain stocks from the kids and from the financial planners. So these two groups have picked up certain stocks. So what kids done is they have picked up the stocks which is close to their heart, like Disney World and Barbie and something. So these are the few stocks these kids have picked up. And these financial planners have done some fundamental analysis, technical analysis, all these analysis, paralysis they have done, and they have picked up few stocks. And that stocks has been taken a buy call. And now what happens after some few years, the stocks which has been picked up by the kids, that has given a good returns, that has gone good, given a great uh, returns. But when whatever the financial planners has took comparatively, It's then good, but comparatively the kids whoever has taken the stocks, that stocks performed very well. So it's they are close to their heart, they have taken those stocks and that performed very well. So just for an example, I'm saying you, whichever is close to your heart, just go ahead, do some analysis and do some researches and go with that. Okay, so now coming back to a main part, which is a crucial part, which is how can I take a calculative risk? And you may ask, I have done, I'm earning this hard earned money, I'm putting it into the stock market. No, what happens if I lose? What happens if it goes wrong? So, all these questions that will be there in your back of your mind, right? So, how to take a calculative risk? Now, you need to understand risk and reward. Okay? How you can understand risk and reward, how you can do your diversification, and how you have to set your stop loss orders, and the continuous learning and monitoring. All these four things is very very important when you get into the stock market, and by these understanding you can take your calculative risk. Okay, so the risk, you need to understand the risk and reward is on both sides. So how much ever we are cautious and we are calculating and we are doing our analysis, so that amount of reward that we will get. So imagine we cannot climb a mountain by wearing a heels, right? So we need to properly wear that particular shoes when we are climbing up the hill, right? So you need to analyze which stock suits us. So he is taking that stock. Why can't I take? No. When he is taking that company, ABC company, even I want to take ABC company. No, don't think in that way. So you can take whichever stock, whichever volume, whichever amount is applicable, is suitable for you. So you go with that stock. Okay, never ever compare yourself with others. Everybody, every stocks is unique, everyone is unique. Okay, so if you want this amount of target, go with that amount of target. If you want big, so the target, the long term investment, that varies from one person to another person. So 5 years of investment is a long term for some person, but the same 5 years of investment is very less for some person. So it depends upon your individual requirements. So what means to you, what is affordable to you, you go with that stock. Don't compare yourself, compare with anybody you. Okay, and there are so much of top investors who are all doing this small investment according to their portfolio. And the next thing is FOMO or follow. So what is FOMO and follow? It's called fear of missing out and fear of losing the money. Okay, so if this particular stock is not suitable for you, if the particular food which is allergic to you, just please avoid it. If 10 people are eating the same food, if that particular food is allergic to you, why should you go for that? If you get allergic, you are the sufferer, right? So don't ever compare yourself, or don't think that he is taking up that stock, he is doing in this buy, he is taking that sell, and he is telling that he has done taken 10 years back for 108 rupees and now it is 208 rupees. Don't just bother. Now you don't have to go and buy 208 rupees of the same stock which he has taken 10 years prior. No, that won't suit you. So he may be closing his position by 208 rupees now, and now you will go and pick up the stock for 208 rupees, it may fall down for 200 rupees. So don't, do your research, do your decision, take your decision. Okay, if he is taking, she is taking, they are taking, institutions is taking, don't do that. You do your research, whatever is coming to you, that will come to you. Okay, So whatever stock which is close and you feel comfortable and if you trust the stock, go with that stock. Okay. And diversification, this is one of the golden rule. Yes, all agree, right? Yes. So what happens, we have 1 lakh of investment, we have 1 lakh of 1 lakh or 2 lakhs of principal amount, or you will take for all the complete principal amount 10 stocks, you will take 10 lots in one particular stock, 10 quantity, 100 quantity in one particular stock. No, right? Please don't do that. If at all, if you're doing that, please don't do that. Diversify it. Okay. So one stock, one amount, other stock, one amount. So diversify. Split your portfolios. So in each bucket, put few amounts. Like for an example, if you are, so if you are spending like 5,000 in this month, in the next 5,000 on the other month. So if you're taking one lot, one stock in one month, then add it up on the next month, on the next year. So just keep adding, keep diversifying. Okay, don't keep everything in one company, one big company. No, please don't do that. And see to the market trend. Like imagine when we were in the lockdown, what happens, certain industries has gone down and certain industries has boomed up, like technology. Yes, we are all on Zoom, right? So the technology has gone up during the lockdowns. And what are pharmaceuticals, this healthcare, that has gone up. And these finances, that has gone up. So you need to understand the market, analyze the news, seek the news. So find out which industry is going up for these many years, for these, for the next 5 years, which are the industry is going to boom up. So create, but make an analysis on that. So do some researches, do some learnings on that. Then you can go ahead and get into the particular industry and split up your portfolio with certain industries. So some 2 to 3 stocks in technology, some 2 to 3 stocks in healthcare, and 2 to 3 stocks in finance, in banks, in insurance companies. So you can segregate, you can diversify that way, and you can make your portfolio wealthy and profitable. Yes. And how can we set a stop loss orders? Yes. So what is stop loss orders? So it is preventing you from an accident. So if the market falls all of a sudden, if you have your stop loss in this zone, you may feel, oh my God, thank God, my principal is saved, right? You will say that, right? So that is where your stop loss orders comes into a play with a vital role. So you're avoiding your losses, so you're not burning your finger. That is where this stop loss orders are playing a vital role in our trading. So how you have to place your stop loss orders? Now you have to have a clear trading idea. So you need to know which strategy you're following, where you have to take up a buy entry, where you have to take up a sell entry, where you're putting your stop loss, and where you're putting your profit. You need to have a clear cut idea of your trade, and you have to reasonably do your stop loss and take profit levels. And you need to also check if this risk and reward matches your requirement. Say for an example, if you are targeting for 1,000 rupees of profit, which is 1%, and your risk also should be 1%. So 1:1 ratio if you keep, so if you can tolerate that 1,000 rupees as your loss, even if it gets lost, you should not feel bad, or you should not uh, get stressed out because of that loss. So that is a kind of loss you have to keep. So that is called calculative risk, which amount is acceptable as a loss for you, that amount should be your stop loss order. And you need to determine your position size. Say for an example, if you are taking up a trade, and now on your first trade, if you are into profit, now on your second trade, don't go for two lots, because you will become overconfident. Yeah, I got first 1000 as a profit, now I know the stock market very well. Yes, somebody is like that, right? Yes. So please don't do that. Don't overtrade. Yes. Don't overtrade by putting additional lots. Yeah. If you are so sure about the strategy, if you're so comfortable with your trading style, then go with only one lot. Okay. Otherwise, stop the position, close the trade, and you can come out of the day trading if you are a day trader. Okay. And learning and monitoring. See, like humans, we have everybody has unique, everybody is different in characters, in behaviors, right? So the same way with characters and with behaviors, when stocks vary, so every stock is not same. So every stock is doesn't behave properly. Like some stock will obey the support and resistance level, and some stocks, they don't even bother about the support and resistance level. Okay, so how will we know that? Now, how will we know humans? By making them friendship, right? So you come to know with certain characteristics, with certain persons, like how we will come to know their character? By making friendship with them. So we have to make friendship with the stocks as well. Okay, so continuous monitoring, so you have to stick to those particular stocks continuously. You have to watch the charts continuously to understand that particular stocks character. Okay, so imagine the world of investment as a dynamic puzzle, and that's always changing, right? So market keep changing. So before 10 years, the market were not like this, because after lockdown there are so much of new demat accounts, trading accounts has been happened. And what happens, more and more number of people who are involved in the stock trading. And what happens, these beginners, there are so much of beginners who are involved in the trading. So those beginners, without strategy, and they are not so sure about the market, and they keep putting their money trading. So what happens when there are so much of beginners involved into the stock market? The volatility is also happened. So there was so much of volatility happened after these lockdown periods, with higher number of people involvement and higher number of volumes. Automatically the volatility has been happened drastically. So the market develops, the market keeps changing, the economic shifts. Okay, this is like, they are like pieces of that puzzle. And if you are not continuously learning and adapting the technology in the market, in the styles, in the market changes, in monitoring those stocks, it's like we will be like in a blindfolded. So keep updating and keep monitoring the stocks, and keep getting the news, keep getting the market, the economic conditions, that will try to solve the puzzle. Okay, so keep learn yourself and stay informed and stay ahead. So you need to have an eye with the financial news and market trends as well. So you just keep analyzing the economy, the international markets. If you want to trade in gold or silver, we have to watch the international markets, and you have to make your informed decision before you start investing into any commodity or any stock. Okay, and you just need to apply these adjustments whenever there is a requirement, so you don't, you know, emotionally attached to your portfolio. If you think before 3 years or 5 years, if you are investing in any particular stock, then if that stock goes well, and for few years, if the company doesn't do something well, and if the company has loses his any one of the project, then don't get attached to that company. No, 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 this company I'm holding it for the past 5 to 6 years. How can I leave it? How can I close the position and come out of that? No, no, don't be emotionally involved in those things. If that company is not doing well for at this point for few years, then close the position, come out, then adjust your portfolio. Do that amount, that principal amount in that profit into the other stock, whichever is doing good. Understand? So whatever, whichever stocks is performing well, put it in that. And then after some few years, again, if that you're emotionally connected company or a stock which is performing again well, again booming back, then go ahead with that. So keep changing if at all, if required. Okay, so that should not impact your investment or profit. So you plan accordingly and make your adjustments. Okay. Yeah, as I said, the character of the stock, that is unique, so we have to keep monitoring, keep analyzing the stocks. Only when you keep in touch every day, see if you are, for an example, Adani Ports or Reliance, if you keep monitoring, you will understand whether that particular stock is coming back and it is it is giving respect to the resistance or support, or it is a reversal stock, or it is just a trending stock, or what. You will come to know, you will analyze those stocks with the complete, monitoring. Every day you just sit for few minutes, see to the chart patterns, how he's moving up or down, or is it in a sideways. Keep monitoring, keep knowing, keep, you know have a friendly relationship with the stocks, with the patterns. Yeah. Yes. So now we have come to the end of the session. So there is lot more to learn. So I hope this small 30 minutes, that would be helpful, and you may have a small piece of understanding about the stock market now, I believe. So if you have any questions, you can ask me, and hopefully I think that I have given some insight about the stock market to you. So give me a takeaways on the comment session now. Yeah.
Okay, wow, that's wonderful. Awesome, awesome session. So I really appreciate. Thank you so much for sharing your wisdom here. And friends, you can ask your questions if you have any. If you want to clear your doubts, you are most welcome for that. So meanwhile, I have some questions for you. So let's start the Q&A session. So the first question is like, how can someone with little or no experience can start the journey in stock market?
Yes, as I shown in the chart, like which is close to your heart. Like we are using every day, we are using some paste, and we have our savings bank account like SBI or ICICI. So you trust that bank, right? So start investing on just 5,000 every month, or 2,000, or whatever amount is possible. Just start investing on that particular stock or a company, and you can build up. Then you can just slowly steadily start analyzing, start learning this technical and fundamental analysis, and then you can go ahead in full fledged if you want to go as a daily trader or a swing trader or anything. So you can start in that way. So there is no harm in that. So if this particular stock is of 500 rupees or 1,000 rupees, just take one stock of ICICI Bank or HDFC Bank or the Britannia. We are we are buying every day for the kids, right? So in that way we can choose. So that's the easiest way.
That's good. So the next question is there any difference between active trading and passive income strategies?
Normally this active trading comes as a people who go with day trading, so they involve in a day trading and a swing trading. So for these kind of trading involves some time, they need to take some more time for the decision, because they are taking trades every day and they are taking trades every week. So and also as a contract traders, so for Nifty, if you come into Nifty, they will take up trade, they will take options trade, they will do hedge fundings, hedgings. So these things they will do, they require some time for that. But for investment purpose, it's not like that. At least weekly once, every Sunday you can sit, just watch your portfolio, whether it is going up or dipping. If you want to, close your position and come back, you can do that. For investment, there is no much time required, and no not much amount also required, so you can start, like as I told, start investing with small little amounts. That's well and good.
Okay, that's awesome. So okay, there is another question is how important is it to have a long term perspective when I'm seeking for a passive income?
Okay, so when it comes to long term investment, there are two categories. So some people, they only look for like long term, like for an retirement plan, or for a kids education, or for any other stuffs, like long term for 10 to 20 years they will plan accordingly. So for them, they don't look into the stock market as a passive income. But for some people, we can just contract, we have gold silver as a contract period, and Nifty, bank Nifty, we all do have a contract period for that. So at the month starting, if we are investing some amount, and we can close that before the contract expires. By the end of the 30th or 29th, we can close up that contract and we can take up the profits. So in that way, our passive income, we can generate passive income in these categories. And
Okay.
if we have time, then we can go with swing trading. Every week we can sit, analyze, and every week we can put some amount. We can do option trading. So these are the methods we can do for the passive income streams.
All right. That's good. So, but there's another question is I have fear of markets ups and downs. So, how
Hmm.
can I proceed in this?
That's a very good question. And everyone, I think most of the people have this. Either
Yeah.
they have fear, no, or they have greed. So the 99% they have a fear of losing. So that's why if we want to avoid our fear, we have to take a calculative risk. So if
Okay.
we have, if you are putting 10,000 rupees, don't take risk for 5,000, then definitely you will lose your money. Take calculative risk. If you can afford 1,000 rupees as your loss, then go with that. And also, you have to avoid this greediness. Putting 10,000 and again getting 20,000 on the next day, this mindset will not work in stock market. So we have to come out of these fear and greed. Only then we can take a calculative risk. And if you calculate your risk, there is this fear will not bother you at all.
Okay. So, there is another question
Yeah.
is there any get rich quick formula?
No, it
So,
is
please ask, ma'am, if there is any get rich quick formula in stock market or trading.
no. If it is a get rich quick, you, Prashant, you, me, and whoever is the audience, whoever is listening to this will become rich, right? So this is absolutely not a get rich quick scheme. So if you have that in your back of your mind, throw it out.
Okay.
Yeah.
There is no shortcut, right?
No,
We
no,
have
in
to at
any
least give time.
business, we don't, in any business you take, there is no shortcut. There is no
Yeah.
shortcut.
So we should give time.
Exactly. We should keep learning, we should keep practicing, we should experience, and definitely with the proper mindset and with the proper techniques, we get success.
So we have a question here
Yes.
from Pradeep. How to start trading for beginners? What is basic points be in mind when do trading?
Yeah, to start, if you are a beginner, just go with simple stocks like um, yeah, pick up the stock which is close to your heart, or if you with the fundamental and technical analysis, you can check your parameters, like if you, since you're a beginner, you may be having some analysis, right? Like this is the strategy I have to follow with moving averages or Bollinger Band, whatever what is you are taking, just go with one lot initially, then start accumulating for the next month and for the next month. Or if you are looking for a passive income, then start with, even for the passive income, I would recommend start with small amount, not big amount initially. Don't go with big amount. So just start with few 5,000 or 10,000 in one particular stock, get the returns, then go with 2 to 3 lots, something like that. So with a proper mindset also, please come out of the fear. Without fear and with calculative risk, you can start your trading. Okay.
Okay, so I'm
Hope I
sure
have
Pradeep you
answered your
got your
question,
answer.
Pradeep Kumar.
Yeah.
Yes.
Okay, so another question is like, can you please ask ma'am to share any personal lesson she has learned from her own trading experience?
Yes, I have started my journey. I have started trading as a in 2015. So by 2015, it is like trial and error. I was learning, going for so much of classes, and so many things happened. I put money, I lost money, so money, and that was happened in the earlier age. For the first 2 to 3 years, it was like completely learning, experiencing, and things. Then started slowly, because when we were before lockdown, the margin, the SEBI has given a margin. Yeah, thank you, Pradeep Kumar. So the margin, which is very less for any stocks and commodities, with very lesser price. If we have 10,000 to 20,000, we can easily take any stocks. But after lockdown, before few years, SEBI has changed the rules completely. With full margin, with 1.5 lakh of margin only, you can trade Nifty stock, which is one lot for futures. So when that comes, most of the retail trader has gone out. So then I have started slowly. I, after burning my finger, after getting so much of stress, I have started realizing my psychology, my emotions started controlled, and little by little, 10%, 20%, 30% out of my principal amount, I started picking up, taking up the profits. Then I realized, okay, fine, now I'm stabilized. I have started doing that. So at least 20 to 30% of the profit I keep making for my income and to take care of my family.
Okay. One more thing is like when the stock market goes down, or if I have invested in like some company and I see that the market is going down, so it's really difficult to stay motivated at the time. So how would you like say something about to be motivated and continue learning in the field of like this dynamic stock market? How to stay motivated?
Now, this is again one of the myth that if the stock market goes down, we will be in the loss. This is again one more myth that needs to be ruled out. So, if even the stock market goes down, even if it is crash, the market crash, during the lockdown, there are so much of people, they have put 1 lakh in, they have got so much of amount, more than 50 lakhs they have received as a profit alone, because of market crash, because they know they have done their options trading in PE, put, we call it as put. So during the market crash also, even the market falls also, you can go with your selling position, you can take up a selling position, or in options trading you can give a put order. So in that way you can earn money, you can get profit out of it. So it doesn't mean only when the market goes up we can get profit. No, even when the market falls down, with proper strategies, that's what I'm telling you, with understanding, learn markets, how it works, what are the options. So even with falling market, the option will give you a profit. So that's an option.
That's wonderful. I have only two more questions as the time is already 1 hour. So
Yes.
the first question is, do you think that patience plays a wonderful role in this? Because sometimes it's really difficult to stay, like to be patient when I see that my investment is going down. Like
Yes.
again, as you said, it's a myth, but again, when somebody sees that money is going down, the slider is going down, the person would be in loss. So how patience can help me in that?
Yeah. So, see, when the market goes down, you may feel loss. So that's where this stop loss and this technical analysis works. So if you know these some certain technical analysis, if see during lockdown what happens, most of this transportation, airports. Railways, buses, these things, transportation has been locked down. So these industries has gone down. So what happens, the portfolio, whoever is holding those industries, those portfolios, they have closed, covered up their position, and they have come out. So if you are so strong, if you can tolerate with certain limit of losses, those people are holding that, because they know for sure, at least even for another, after 1 or 2 years the company may again go up, this lockdown will not sustain for a longer period. So they have that calculation in their mind. So for some people, for some people, 1,000 rupees is very high amount. And for some people, 10,000 is a big volume. For some people, 1 lakh is a big volume, and for some people, 1 lakh is not a biggest thing at all. So we need to analyze, if the market falls, if we are on -1,000, -10,000, -1 lakh also, it is okay for me. Then they will be in a mindset of, okay, let me wait, it's not urgent for me, let me wait for another 1 or 2 year. Definitely after, only after 5 years my son or my daughter is going to become 21 years, so let me wait until that time. So if that is a mentality, they will wait. If that is not a mentality, they cannot wait. And in that case, if they know technical analysis, yes, there is a big red candle fall in economy, already US market has fall. So now the Indian market follows the US market. So if he started falling, eventually in a month or two, Indian market has a possibility of fall. So these traders with these understanding, learning, with understanding of market condition, they analyze, okay, it has fall, US market has fall. Now what is my job is to cover this position. Whatever amount I have, whatever profit I have, let it be, let me pull out that, and let me wait for another few more months or few more years. Then we start again putting in our, start accumulate the money in the portfolio. So that's the
Okay.
mentality they will have. So
Yeah.
the patience is like that. So if you can be patient, be patient. If you cannot, then analyze the market, understand, and come out. Whatever profit you have, anyways you are in the profit. It's 10% or 20% or 30%, it is a profit for you, unless and until you lose your principal. right? So in that way you can analyze things in such a way and act accordingly.
So also usually see being in the life situation, it's difficult to be patient. But again, see, it's your mind, it's your mindset.
Yes,
And what you can do, you can just give a command to yourself, like if this is a night time, then surely day will be coming,
correct,
right?
correct,
So this is
right,
the night time and day will come. So as you are sure about the day and night, so the day will also happen for you. So give
correct.
this command to your mind, and you will be more patient, because when you show something positive to your mind actually helps you to come into the positive state of mind, right? Okay, so not much time. The final final question is: any final tip you want to give uh, to all the viewers who are watching us now or who will be watching us later?
Yeah. So, to whoever the audience is, thank you so much for making this session a wonderful evening with you all. And please do understand market. Please learn, start investing, and start participating in market. I would suggest, and if you have your daughters, your siblings, your sisters, your mothers, your wives, please allow them to take decision for this investment plans, and let them analyze, find out, allow them to do things on in part of investments. And if you have kids also, please allow your kids, if you are a parent, if you have kids, your teenager kids, all the kids nowadays, they are so strong in technology. So how can we know that they'll be very good in money management also? So you're giving some every month pocket money, right? So make them to do some payments for your monthly bills, like small phone bills or electricity bills or something like that, small amount. Like, let them do that, let them make involved on the investment and spending money in a proper way. So that when they come to their 20s, 21, they will come into the knowledge, the practice of making money management and investment plans and ideas. So in that way you can start practicing your, even small kids like teenagers, 12, 13, 14, they are so, even they will teach us like, this is how you have to do Instagram, this is how you have to do Facebook, this is how you have
Yeah.
to do things in technology wise. So when it comes to account management also, let them do that, only then they will be a good listener and good money management. They will get a money management skills in a better way when they come to their 20s. So we'll get a good future generation for the family and for the society and for the whole India. Yeah, this 3% of, we need to change. With 1% and with few coaches it's not possible. With the entire India, with all your parents and brothers and sisters and whoever is, so it's a group, it's a group commitment, and it's a group thing. So encourage your kids, if you are a parent, and if you are a kid, if you are a children, please encourage your parents, guys. So thanks so much, and thank you so much, Prashant, for this wonderful opportunity for me, and to get into your audience, and whoever is watching now and whoever will be watching. Thank you so much for the session. You have made this session great, and I'm so happy by sharing my knowledge. And if something has gone deep inside your mind with this 1 hour session, please do in the comment, please write it in the comment section. I'll be so glad to read this. Thank you,
Okay.
thank you so much.
So, friends, as we come to the end of the session, I actually want to extend my heartfelt gratitude to all of you who have been a part of this enlightening journey. Your presence, your questions, and being here actually made this session a success. And of course, a special thank you to goes to our incredible guest speaker, Vani Priya.
Thank you.
Vani, your expertise and insights have been a guiding flight for all of us to explore a lot of things in the world of stock market trading for passive and continuous income. And to our audience, once again, remember that learning is a continuous journey. The idea
True.
and strategies we have discussed today are actually meant to empower you on your path to financial success. Keep building on this foundation, keep exploring, and keep growing. So stay connected with us for more valuable sessions.
Yes.
And if you want to connect with Vani, then I will mention her details in the description box, and you can connect with her to have more knowledge, to learn and to get succeed in the journey of stock market trading to get a passive income, continuous income for your life. Once again, a big thank you to everyone for making this session meaningful. And let's carry forward this knowledge, what we have gained today, and continue striving for a more financial secure future. So, thank you so much once again. Thank you so much, Vani. Thank you so much, all of you. So, see you next week with a new speaker and a new topic. Till then, stay healthy. Take care. Goodbye. Namaste.
Thank you. Thank you, Prashant. Thank you, everyone. Bye bye.